won't believe how easy it is to calculate your withholding taxes when retiring abroad. I'm Joe Macek, cross-border investment advisor and portfolio manager with IA Private Wealth and IA Private Wealth USA. And today, I'm going to show you some killer shortcuts that could save you a ton of time when trying to figure out what your withholding tax will be depending on the country that you retire to. But that's not all. I've also found what I think is the absolute best tool on the Government of Canada's website and some unbelievable links for even more non-resident tax information. Let's get started. A few weeks ago, I released a video in my Retiring Abroad series that focused on getting your CPP and OAS payments tax-free, and the response has been nothing short of explosive. I've been inundated with fantastic questions like, can you cover Peru? What about Serbia? Can you get CPP and OAS tax-free in Greece? And a number of other great questions. And if you want to know more about retiring abroad, I've created a new playlist for this series so you can watch them all together without digging around. That said, there were also a lot of questions on if the tax-free status applies to private pensions, which was timely because I just had a call recently with a US advisor to explore how company pensions are taxed in the US. But more on that a little later. Now I'm going to attempt to answer most of the questions I got in the comments from my last video. But I want to be really clear here that while I'm well versed in cross-border issues between Canada and the US, I'm not an expert in every single country. I'll do my best to provide some useful insights, but for specific advice on any country, consulting with a local cross-border tax expert is probably best. So you might be thinking this all seems like it might be a lot of complicated work for me, and I totally felt that way too at first. But while I was digging into the research for this video, I stumbled upon something truly remarkable. The Government of Canada has an incredible tool called the NonResident Tax Calculator, and I'm excited to say it's one of the best resources I have found for figuring out what your withholding taxes will be in different countries from different sources of income. This tool can help alleviate your non-resident tax issues quickly and easily. So let's dive in and see how this game-changing calculator can simplify your tax calculations. The first thing you'll want to do is check out the Government of Canada's non-resident tax calculator, and I have left a link in the description below, or you can also Google non-resident tax calculator to get to the main page. Next, you will want to click the I accept button, and you'll be taken to the main non-resident tax calculator page. Here, you can select the country where you plan to retire. The list is pretty extensive, covering every country from Algeria to Zimbabwe. So now, let's use one of the questions that I received in the last video. Do one for Peru. So we will go ahead and we will choose Peru. Now, there's a lot of information to consider when using this calculator. It provides details on the various types of income, including lump sum payments, periodic payments, pensions, and interest income. For example, there's an option for film royalties, which is super interesting and something that we'll touch on later. But let's say we're looking at a defined benefit pension. You can scroll down to find options like registered pension plan or pooled registered pension plan. We'll select the registered pension plan option to see how it affects the withholding tax for Peru. For periodic payments from a registered pension plan, the withholding tax rate is 15%. So if you were receiving $100,000 in periodic payments, for example, Canada would withhold $15,000 or 15%. However, if you opt for a lump sum payment, the withholding tax now jumps to 25%, meaning that if you withdraw the entire $100,000 pension as a lump sum, Canada would now withhold $25,000. Now, there's obviously a significant difference between the two tax options, with periodic payments typically resulting in a lower withholding tax rate than lump sum payments, and this might be able to help you decide what kind of payments you want to do. But let's focus back on periodic payments for Peru, and as you can see, the tax impact is a bit lower at 15%. Now, you've been hit with this 15% withholding tax on your income from Canada. Do I have to pay tax on this income in Canada and then pay the tax again on the income in Peru, essentially being double taxed on the income? Well, it depends. To answer this question, we need to dive into the concept of the foreign income exclusion or foreign tax credit. A foreign income tax credit is a credit that is designed to prevent you from being taxed twice on the same income by two different countries. It allows you to help offset the taxes that you've paid to a foreign country like Canada against your domestic tax liability in Peru. Essentially what it does is it helps ensure that while you're paying taxes in Peru, you're not going to face the same tax consequences again in Canada. But the question is, does Peru have this foreign tax credit? Now again, I am not an expert in Peruvian tax law or cross-border taxation with Peru, so it's really critical to consult with a local tax advisor for detailed guidance. But we can find some information from a PwC website that I found and look up Peru in their worldwide tax summaries. And it seems that if you live in Peru, you can use the taxes that you've paid in another country, like Canada, to reduce your Peruvian tax bill. However, there are some limits. That said, Peru does have a foreign tax credit that you can apply to Peruvian income. So that's pretty cool. And this is how you would go about determining what your withholding taxes for a specific income stream is for a specific country, and to find out if that country has a foreign income exclusion or a foreign tax credit for their taxes. PricewaterhouseCoopers website also lists some contacts in Peru, and while I can't personally vouch for their expertise, being on the PwC's website would suggest that they would have some pretty good knowledge about Peruvian taxes and likely have some insights into foreign tax relief between Canada and Peru. Alright, so let's switch gears and look at Thailand. If you go to the non-resident tax calculator and select Thailand, you'll see that the withholding tax rate on periodic payments from a defined registered pension plan is 25%. This rate remains the same whether you're receiving periodic payments or a lump sum. Now, Thailand's rules are a little bit different. According to their tax guidelines on the PwC website, you can't always claim foreign taxes as a credit unless there is a double tax treaty in place. Fortunately, Thailand does have a double tax treaty with Canada, but again, I'm not a Thailand tax expert, but according to this information from PricewaterhouseCoopers, it suggests that although you might face a 25% withholding tax in Canada, you could potentially reduce your Thai tax burden by claiming a credit for the Canadian taxes paid. Now, let's take a look at the Philippines next. According to the non-resident tax calculator, the withholding tax on periodic pension payments is 25%. This rate likely applies to CPP and OAS as well. However, the Philippines has specific rules regarding foreign tax credits. It appears that while there are double taxation agreements in place, they may not always provide relief for taxes paid abroad. It says on the PwC website that foreign income taxes cannot generally be used as a credit against Philippine income taxes. This means that you might need to focus on minimizing your Canadian taxes, as you may not be able to offset them against taxes owed in the Philippines. However, there is a tax treaty with Canada, so you might want to consult with a local Philippine tax expert or contact the provided resources on the PwC website for more precise guidance. Here's another crazy cool thing you need to see. Over 90% of my watch time is generated by viewers who are not subscribed. And what these great viewers may not know is that hitting the like button for the YouTube algorithm is awesome, as it really helps out my channel. So if you like how I slipped this shameless self-promotional plug into the video, please consider liking and subscribing, as it really helps my videos reach many more great viewers like yourself. Now, we will do one more example on the non-resident tax calculator site. Let's check out Greece. For periodic pension payments, the withholding tax rate is 15%. Lump sum payments are taxed at a higher rate, around 25%, similar to other countries. In Greece, you can claim a foreign tax credit for income taxes paid abroad, but there are conditions. To benefit from this credit, you must file a Greek tax return as a resident and provide original supporting documentation to the Greek tax office. However, the credit is limited to the amount of Greek tax that would have been owed if the income had been earned locally. Again, for precise guidance, reaching out to a local Greek tax professional or resource in Greece could provide more tailored advice. Again, I just want to make sure that I've said the disclaimer here enough times. Now, let's address the question from Robert Grant about retiring in the US and obtaining a visa. Robert mentioned that he's been trying to find a way to retire in the US, but hasn't had a whole lot of success with traditional visa routes. While I'm not an immigration lawyer, I can offer some general insights. Typically for retirees, I have not heard of any specific visa solely for retirement. Most visa options for the US require business activities or some sort of investment, which Robert clearly wants to avoid. However, there are special categories for individuals with extraordinary abilities or achievements. achievements, such as the O1 visa. This visa is often used by people with significant accomplishments, including popular YouTubers with substantial followings. So if Robert were to start a YouTube channel and build a notable presence online, he might qualify for such a visa, which could allow him to live in the US permanently while pursuing his YouTube activities. This path might not only help with visa eligibility, but it could also provide some pretty good side hustle money through ad revenue. Robert, I promise if you start a YouTube channel, I will subscribe and like your videos. However, and I can't stress this enough, for precise advice and visa options, consulting with a US immigration lawyer would probably be the best approach. And it seems in this case, Robert did just that, and I think they probably gave him far better information than I could have here. Now, the calculator income sources can drastically change your withholding tax situation. For instance, if you're earning estate or trust income in the US, expect a 15% tax bite. But here's a twist. Film royalties are taxed at a much sweeter 10%. And it gets even better. Copyright royalties can be completely tax-free. That's right, zero withholding tax on some of your income. So it's really important that you get the correct income stream when it comes to figuring out your withholding taxes. So there you have it. Navigating withholding taxes for your retirement abroad doesn't have to be a daunting task. Whether you're considering Peru, Thailand, the Philippines, Greece, or even the US, understanding the tax implications is critical for planning your financial future. I want to give a big shout out and thanks again to my amazing community of viewers who've been engaging with my content. If you have any more questions or topics you'd like me to cover, feel free to drop them in the comments below. But I do hope you have found, as I have, that the Government of Canada's non-resident tax calculator can be a game changer for quickly assessing withholding taxes across different countries. Do you want to know if you lose your CPP or OAS if you move abroad? Or maybe you want to learn more about my latest upload? Well, I've got everything all queued up and ready for you. Click here for more amazing financial insights. I'll be waiting. We'll see you soon.